InvestSMART separately managed account benefit number 7. It's not a pooled investment. Pooled investments like managed funds can disadvantage the long-term investor who is happy to ride out the volatility of the market. Managed fund investors' performance can be negatively impacted by herd mentality of people putting cash into and taking it out of the market at the wrong time. In a separately managed account, there is no herd, just you.
Hi, I'm Laura Daquino. I'm a journalist at Eureka Report. Welcome to Market Watch. The ASX started on a dip and bounced back up this week. It started the week at 5667 points on Tuesday morning and was at 5788 points Friday midday. It defied much of Wall Street logic this week as US markets were dragged down by the tech sector, but the ASX kept a skip in its step. We're on Media Watch this week at Eureka Report. And this week, the media is the news. One of the biggest news stories was 10 Network being placed into voluntary administration. Its share price had been shrinking for a long time, and so had 10's audience. Millennials are switching the channel and hanging out with Netflix and Stan instead. Video-on-demand streaming services cost half the price of a smashed Abo breakfast for 1 month's viewing. And we're hungry for all of them. Video may have killed the radio star, but now its on-demand predecessor is on a mission to kill all other former stars. Billionaires Lachlan Murdoch, James Packer, Gina Rinehart, and Wynn Corporation owner Bruce Gordon invested more than $1 billion into 10. The company is now worth just $59.1 million. Murdoch and Gordon are apparently looking at a partnership to take 10 private. It's no wonder when you look at the comps and see how share prices have trailed off over the past 5 years. However, the 2 out of 3 rule is in Murdoch's way, which prevents the ownership of a newspaper, TV network, and radio station in the same market. Then the brakes are on Gordon because of the reach rule, which prevents a TV network broadcasting to more than 75% of the population. Labor, the Greens, and One Nation are all fighting to keep these rules. There's long been concerns that concentrated media ownership threatens a healthy democracy. But Communications Minister Mitch Fifield believes the greatest threat to Australian media diversity would be an Australian media organisation that didn't continue. You decide. Or the Senate will shortly. Stay tuned. On screen and off screen, there's enough activity going on in the media landscape. Investment bank Credit Suisse issued a new note yesterday about Nine being best positioned to gain from 10's troubles. The analysts believe that Nine could capture up to 4.5% of the advertising market share. Investors know to follow the money, but it is hard to see where the money is. Nine's share price has climbed 50% since October, and it spiked over 6% on news of 10's troubles on Wednesday. But it has since retreated. So, should we follow the action headliners or the activism favourites in the media? In April, Credit Suisse identified News Corp and Fairfax Media as ripe for activist takeovers. Through activist takeovers, hedge funds are said to typically target companies with underleveraged balance sheets or with shares trading at a considerable discount to the sum of the company's parts. Credit Suisse cited potential gains if a new suitor closed News Corp's online education business and newspapers in Australia and the UK. And Fairfax would gain from a big restructure as well. And would you look at what the recent bidding war has done to Fairfax share price? We all know the saying that content is king, but content is also cheap. A taste of what's to come. As Eureka Report commentator Bob Gottliebson said, young people have been sucked out of television and media problems are merely a forerunner of events to follow. Bob believes after the media revolution, retail will follow on. And then it seems anyone's guess as to what's next.